and welcome to the Cable Live series, where we talk about the impact of the coronavirus pandemic on the various sectors of the Nigerian economy. Today, we'll be talking about the impact of the pandemic and the consequent phased lockdowns on the banking sector. The pandemic has left the world grappling with new challenges, the challenges of functioning in a crisis that is unprecedented. The banking sector is no exception. Banks, their employees, and the customers have felt some form of discomfort in the banking processes and operations in this COVID era. Generally speaking, Nigerian banks came into the pandemic considerably strong after adopting the International Financial Reporting Standard accounting systems for bad loans. But the pandemic and the sharp fall in oil prices, predictions are generally getting worse by the day. According to a Fitch Solutions report titled Nigerian Banking and Financial Services, for the third quarter of 2020, the high inflation and increased government borrowing will be responsible for much of the headwinds to banks' profitability in the medium term. Today we have with us Abubakar Suleiman, who is the CEO of Sterling Bank, and he'll be talking to us about the impact of the pandemic, as well as monetary policies on the banking sector. Mr. Suleiman, thank you for joining us.
You're welcome.
Okay, so we'll just get right to it and ask a few questions about the banking sector, how the banking sector has fared or thrived in COVID era. So we want to know how the pandemic has affected the Nigerian banking sector, daily operations, and just generally profitability. So if you can speak to that, we'll be glad to hear you.
Okay, thank you, Ogechi. Thanks for having me. The conversation around how the pandemic has affected our lives is one that is a bit premature. The reason being that even though we've seen quite a significant change in the way we do things, it is far from over. And even when the pandemic itself is over and we then attempt to return to normalcy, we will then realize that there are long-lasting impacts and implications of this lockdown. If I'm to be specific to the banking sector, I will start with the implication for the quality of risk asset in the sector, because that seems to be something people are quite interested in. Primarily, there are two critical sectors, as far as I'm concerned, that if they are massively impacted negatively, could pose a significant risk to the sector. The first one is government, obviously because there's a significant exposure to government at the federal level, but also at the sub-sovereign level, which is the state government. And as far as I'm concerned, I don't see any negative outcome from that in terms of the existing exposure to government. You would recall that there is a cap of 10% to the total credit that Nigerian banks can give to state government. And the sector is very much within that. So the real impact of difficulties with state government loans, for instance, is not material. But beyond that, when you look at the numbers, the states are actually in much better state than they were in 2015. If you recall, we got to a point where 29 states or so were unable to pay salaries in 2015 until the federal government intervened. We are not there right now. The states are much healthier. The work that was done, the Fiscal Responsibility Act and the work that was done around that has meant that most of the states are actually fairly under leverage, and therefore will ride this out. I don't have a problem with the federal government borrowing for as long as we're talking about local currency borrowing. I don't see how that can affect the quality of risk asset in the banking sector. So that's one side. The second one is concern around the oil and gas sector. And I think that is often misunderstood when people look at the price of oil at a point in time, be it a week or a month, and start to make projection over an asset that has at least a decade of lifespan. So it's really difficult to take a $20 drop in oil price for a period of 30 days and suddenly start to change the forecast. The sense is that we are not bullish on oil, but it is also not significantly worse than it was before the virus. It is clear that whatever delay in demand that we saw during the lockdown is likely to be made up for once the economy starts to open up. We saw that with China. There was a significant reduction in oil consumption, and once the economy came back up, they made up for it. So I would say that as far as risk asset is concerned, the risk to the sector, I'm not particularly worried, especially because the sector is incredibly liquid. I don't think in my years in banking I've ever seen at any point where the Nigerian banking sector has as much liquidity as it does today. And I also haven't seen the level of capital adequacy that we have right now. So I would say we came into this crisis much stronger than we've been in a long time.
Okay, so you would say, you would then say that the 2015-2016 recession prepared the Nigerian economy for the fallout of this crisis that we're currently witnessing.
It did. I mean, take for instance the level of exposure that we had to trade finance in 2015. It was incredible. It was really large, and because of that, the credit implications were much more significant. Our counterparts panicked a lot more because we're talking about really large amounts. If you also look at cash call obligations of the government, when the 2015 crisis came, we had outstanding that were very significant. You compare that to what we have now, where most of the outstandings have been settled. So I think not all the lessons from 2015 were lost. Some of them actually have helped us in dealing with the current crisis.
Okay, so we just go back a little to the inception of the lockdowns and inception of the pandemic. What steps did your bank, or generally speaking, what steps did the banks take rather, to sustain essential services, but still protect the health and well-being of your employees and even customers?
Okay, so starting with the customers, it's easy to underestimate how much investment Nigerian banks have actually made in being able to serve customers remotely and virtually. We do have a very solid payment system, not just for those who have access to data and therefore can use our mobile banking application, but we've also successfully, taken the USSD payment system to millions of Nigerians. So a lot of them were able to actually operationalize their accounts, even those who had not started using these facilities. So payments was not a big problem. A lot of the banks were able to keep payments ongoing. There were challenges around access to cash, and that was because movement was restricted, and therefore keeping the ATMs running or opening the branches was out of the question. However, if you were not looking to access cash, it was quite easy for you to transact, pay your bills, buy airtime, and all of that. So that's one thing that we did very well. The second one, where the sector may not have been as prepared, but I think Sterling Bank was prepared, was access to credit. Again, especially access to retail credit. Again, there was significant investment in that sector. We had a Spectre lending platform that had already considered what it would be like to grant credit to customers without them ever coming into the branch. And so that became our approach to consumer credit. And then we also had to respond to the fact that the pandemic and the lockdown had affected people's source of livelihood, and they couldn't pay or meet their credit obligation. We're able to also extend remote access for them to restructure their facilities and all of that. So access to banking services was not at the level we're used to, but it was not significantly worse, because when you look at the data, the payment data suggests that Nigerians continue to transact throughout the lockdown, and in some cases actually spiked.
Yeah. Okay, so you've talked about access to banking services, but let's talk about protecting the health and well-being of your customers and the employees. What steps did your bank take?
So we had actually invested significantly in remote work well ahead of the lockdown. So if you recall, in December last year, we launched the pilot of our 4-day work week, because we felt that the idea of a 5-day work week is something we've lived with forever, and there is no reason why we should not attempt to innovate around it. And prior to that, 3 years ago, we actively started to do remote work as well as flexible work hours. So combining those two gave us the infrastructure as well as the policy framework for employees being able to work remote. So we did not have a problem with our employees staying at home and staying safe and still being able to serve. Regarding our customers, obviously I had spoken about the platform. The other things we did was to make direct investment to help them. For instance, we work with a team of young people who built a platform called Tremendoc, which is for telemedicine. Our thought process was that if people cannot move around freely, and certainly people are not excited about going into hospitals, giving them access to their doctors, to consultations remotely was an important thing to do. So we gave access to 100,000 Sterling Bank customers to doctors across the world, and they were able to continue to take care of their health. The other thing we thought about was that at the early stages, getting tested was the critical thing that needed to happen for us to contain the pandemic. So we collaborated with a couple of people, including the Nigerian Institute of Medical Research, as well as Life Bank, to fund one of the earliest mobile testing facilities, which has then been scaled up and has they've used it to test thousands of people across the country now. So again, our focus was there. Moving further down the line, we then realized that the critical success factor for us was medical personnel, the doctors and the nurses and the ambulance drivers who are at the forefront of COVID. So we quickly launched a fund to raise money so we can start to pay hazard allowance to people at the forefront who were mostly affected by COVID and their in the course of their daily life. So there've been such intervention. We work with the COVID to raise money so that we can sort of support the federal government and what they were trying to do. We've also worked with a couple of state government across the country, and we've also contributed to the renovation and equipping of isolation centers, working with partners. So our approach is to find the best partner for a particular stage in the crisis, and then to support them through that.
Okay, so within your banks, even with the simplistic public health measures, social distancing or physical distancing, wearing a face mask, especially in air-conditioned environments like banks, like banking rooms, really, where the virus can thrive, how do you enforce this public health measures, simple public health measures that are so crucial to curbing the spread of the virus?
So the first thing is to massively reduce the number of people that are coming into the branch. So we found a way to reduce people who wanted to come in to restructure their facility. We started to deliver cards, both credit and debit card, to customers in their home so that they don't have to come into the branch for that. We deployed a new banking, a new digital bank called One Bank, which was specifically designed to enable people onboard themselves so that they don't actually have to come into the bank. And once they do, we send them the cards. Within our own infrastructure itself, we reduced the number of people that were coming into the building from our own workforce. And then for those who came in, we made sure that they all had face masks, and when they didn't have, we gave it to them. We had people in the building who did the basic temperature check to see if they are clear. So, if you have any reason to suspect that someone might need to take a test. We also had sanitizers in all of our building. And then we also essentially we train everyone to handle people better and to be able to provide service without physical contact. And we had face screens. We redesigned our branches so that even though you are within our branch and you're being served by our staff, there is no opportunity for you to be too close enough for an infection. So there were things we did within the branch itself and within our head office, just basically to keep our customers safe.
Okay. So we'll go on to online banking. So online banking had already gained traction. You also touched on it before the pandemic, but during this pandemic, the system, online banking, e-payment systems have really thrived. Can you talk to us about the impact, negative or positive, of e-payment systems in Nigeria? What was the experience for Sterling Bank? What was the increased level, the increased rate? Or was there a reduction rate, or what has worked, what hasn't, and how can e-payments or e-banking systems be improved upon?
The first thing is to affirm that there is no alternative to actually going digital. The alternative is too expensive, is too unreliable, is too slow. So there is no reason why we should consider any other payment system beyond getting as many people as possible to be on a digital platform. That's the first part of it. The second one that is also equally important is that the payment system in Nigeria is actually quite affordable and quite advanced. And when you look at how the cost of payment or cost of transfers, basic transfer has dropped over the last 8 years, we're paying about 10% of what it costs to do a transfer 8 years ago, right? So again, it is affordable and it's getting cheaper. And the central bank has been quite active in ensuring that the cost of transfers keep dropping, especially for low value transactions. So again, that's something we can count on. During the pandemic, the growth in payments, online payments, was astronomical. I think we added well over 1 million additional payments in the first month of the lockdown to just one of our platforms. When you aggregate across all of our platforms, we've added millions of additional payments, successful payments, as well as new customers to this platform. So there is, without doubt, a positive, growth in payments. Now, the question then becomes, beyond payments, you have to really think about how the other aspect of banking can also become digital, because it's not enough for you to do all of your payments online, and then when you need a card, you have to still go into the branch. When you need to have basic access to credit, you go into the branch. So we are moving beyond payments and saying, what about credit? So we build Spectre. What about investing? So we have Double, which allows you to go online and so effectively invest your money without stepping out of your house or office. So it is about taking the entire suite of banking products online rather than just payments.
So let's fast forward to the future. Do you think that banking halls will still exist? And would they be relevant in the future in this digital world that we are currently existing in?
We're convinced that banking hall will always exist, but they will transform. There would always be a place where you want to interact with the people that you handle money for, people that you effectively, you're an important part of their life, and there is room for them to want to interact with you. So to that extent, I don't see banking hall disappearing. We have been rethinking what the banking hall of the future would look like. And so we created a brand called Cafe One, which is our way of being able to get banking to people in the places where they socialize. We also do have the business hub, which is how we have used one of our banking infrastructure to create a place for SMEs to be able to thrive. So if you don't want to come into my branch to pick up cash or deposit cash, what else would you need to do? So you need to interact with people in your ecosystem, your suppliers, your vendors, and therefore I sort of have to create an ecosystem for you to interact to grow your business. So banking hall is no longer a place for depositing and withdrawing cash. It is still going to be a place for banking customers to interact with their bankers.
In March, the Central Bank of Nigeria warned of an economic crisis because of the pandemic, especially with total lending rates rising to about 2.5 trillion. What was the banking community's reaction to this? What should the banks be doing to caution the economic effect of the pandemic?
So banks are actually set up to, sort of function like a sponge. So when in good times, we sort of we soak in all of the profit we can and all of the capital we can. And in difficult times, we then are able to absorb the risk and the shocks from the economy. So the primary function here for us is to actually serve as a shock absorber, to buy time for the rest of the economy to come back online. So that's fine by me. What we need to do, what the economy needs right now, is growth, is employment. And the only role the bank can play in that regard is to actually find a way to make credit available to the productive sector. So our job, what we must figure out to do, is that despite the pandemic, despite the difficulties with growth, we must still get credit to the productive sector. If we don't do that, then it becomes even much more difficult for the economy to turn around, right? So what are the roles of a bank at times like this? We must be at our best at managing risk while at the same time providing additional credit to the economy. The good news is that the central bank has been very active in encouraging that, providing some intervention fund in the critical sectors. For me as a bank and for Sterling Bank, the beauty is that we had invested in the sectors that are counter-cyclical and are likely to benefit in a downturn. So we have always invested in the healthcare sector. We have significant investment in education. We have invested in agriculture, renewable energy and transport. And the hard sector of Sterling Bank that we talked about is now the focus sector for getting this economy back on stream. And I think we're well positioned to support that.
Okay. So we want to talk about the monetary policy of the CBN. I mean, it increased the cash reserve ratio from 5% to 27.5%. I mean, this involves reducing the amount of money available to banks to lend and for just general operations. Do you want to share with us what the increase in this CRR means for banks in general, and then for your own bank specifically?
So the increase in CRR during the pandemic is actually marginal. So we were actually already at 22.5 prior to the pandemic. So the real increase between 22.5 and eventually to 27.5 is 5%. 5%. That is that. I don't think that beyond the fact that it represents a significant accumulation of liquidity that has not yet been deployed, which means that the banks increasingly have access to liquidity if they ever need it. It would be a squeeze on profitability to the extent that what goes into CRR cannot go into treasury bills or bonds. But I think that would be offset, that loss of revenue, I think the banks will make up for it with a lower cost of fund, because generally the cost of fund has reduced significantly over the last 2 quarters, specifically on the back of the fall in the yield on treasury bills. So the yield curve has dropped significantly, and therefore what you lose by putting up additional cash reserve, you gain because your cost of fund is much lower. So you might be, you'd find as banks start to publish their results that over the last 2 quarters, there will be no significant impact on their profitability arising from CRR.
Okay, so what lessons did you learn during this crisis that can help banking systems become more resilient to crises such as the one that we have, or just any other crisis that the world Nigeria might witness?
I think we need to understand that while we are part of a global system, we also need to be a viable system, a viable component. A certain part of the Nigerian economy wasn't viable. And therefore, we struggled and are still struggling. So for instance, the entire health sector, when the global economy functioned well and trade was straightforward, you could easily get all of the inputs that you need, from pharmaceuticals to equipment. What happens during a lockdown when every country is in a protective state and they're holding back on key inputs? You're unable to function. So the first lesson for us is that we are part of a global system, but we must first be a functional part of that system. Otherwise, we are at the mercy of the system. And I think this applies to banking as well. The second one is that we are all increasingly technology companies now. A huge part of our investment goes into technology. A significant part of our workforce are in the tech space. And therefore, we must think like technology companies. And part of that is also to ensure that we own some of our own critical assets. So it's not everything that is then outsourced, because if you do that, you would struggle, for instance, to respond when there is a crisis that requires immediate response, and everybody else is busy responding to their own primary needs. So you have to own some of those assets so you can then respond as well. I guess the general lesson for all of us is that you need to make Nigeria functional in every single way and not depend almost entirely on trade for basic stuff. We need to make the educational system in Nigeria good enough so that when you have a lockdown, you don't then have kids who are all over the world stranded and can't come home. We need to make the health system work so that you don't have people dying because they can't fly them out to India for emergency surgery. So we are all in this together now. You know, it's just a reminder that no matter how wealthy you are, no matter what you can afford, there comes a time when if it doesn't work, we are all in it together.
Okay, thank you for that. Sterling Bank's half-year results show that the CBN restricted about 215.5 billion of its customers' deposits as of June 2020. How will this affect the bank? Do you want to speak on this?
It's not going to affect our profitability. We're still very, we're on track to deliver the profit that we've set out to do for the year. So that in itself has no direct impact on our performance or on profitability. And it certainly, if anything, has sort of encouraged us to lend more. One of the things that the central bank has requested is that we all lend more and achieve a minimum of 65% loan to deposit ratio. And the more you lend, the higher the chances that your CRR will be reduced. So, for instance, there are a lot of there are a lot of intervention fund out there where you can lend and be able to draw down on your CRR. So it's an we're all encouraged to go out there, find the decent operators in the key sectors and lend.
Okay, so in terms of your staff strength, or in terms of just dealing with the pandemic, most organizations have had to let go of their staff. They've had to follow sometimes just several other measures they've had to adopt to ensure that the business or the operations keep going on. So how did Steady Bank have to let go of any of their staff? So can you just talk about that?
People tend to do workforce optimization when their business is shrinking or struggling or declining, or when they have concerns about the future. Our business has not declined an inch since we got into this crisis. On the contrary, we've actually had to work a lot harder to meet our customers' needs, and this requires people. So we do not have any motivation at this point to reduce our headcount. Where there are performance issues or there are issues around ethics, that is business as usual. So it doesn't matter whether there's a pandemic or not. If someone is not able to do the job, that's a separate conversation. And so that's not the case for us. What we are doing, however, is we are retooling a lot of our workforce. So those who, for instance, were engaged in sales and delivered that sales by actually going out to get the customers cannot do so anymore. And therefore, we have to retool those people to be able to continue to acquire customers and do so remotely. We've realized that there's an increased demand for people, for instance, in our contact center, and people who then manage existing customers. So we've also retrained some of our people who were in the branches before to now support the contact center team. And so we also see new skills, new areas where we need people to be tooled for. So data analytics, digital marketing. These are new skill areas, and we are retooling our own people. We're not letting them go because their skills are not consistent with what we need now. For as long as they're able to learn and they're willing to learn, we will put the resources behind retraining them.
Okay, so do you think that this crisis has presented or can present opportunities for improvement, or can be a catalyst to transform the banking system, banking operations? Or just, do you think that this crisis can be a catalyst for improvement of banking systems?
The crisis has validated our strategy, and our strategy has always been that banks need to significantly digitize the businesses that they do, not just in the customer-facing interaction, but also in the back end and the processing side. And so to my mind, yes, I think anyone who ever doubted that that was the right strategy, or any bank that was underinvesting in that journey would immediately begin to pay more attention to it. I fear that if when the crisis is over, a lot of people will return to the habits they're used to. And so this is the time to put in place policies and processes that will ensure that the benefit of the learning is not lost simply because the virus has been defeated.
Okay. So earlier you mentioned starting a fund for frontline health workers. In what specific areas have those funds been used, and what has been the impact?
The primary focus of the Health Worker Fund was to pay hazard allowance to all those that were exposed to the virus, those whose work brought them in direct contact with patients and those who were infected. And so we've paid out to hundreds of frontline health workers across the country hazard allowance, just to enable them to be able to take care of their needs and focus on taking care of the patients.
Okay, so we talk about the dollar crisis, which has worsened in the pandemic. How much longer do you think Nigeria would be able to hold on before devaluing the naira even further?
I have learned as a rule never to take a bet on the exchange rate. And the reason for that is that there are so many factors that affect the exchange rate, and until you can actually speak to all of them, it's simply a gamble. What I can speak to, it's that the exchange rate policies and the monetary authorities are determined to keep the exchange rate stable. They have always insisted that price stability was not negotiable. It doesn't mean that the exchange rate will remain at one point forever. It just means that they give you enough for you to be able to plan. And so to that extent, I think that the adjustment is part of life. But I don't think one should make forecasts about Nigerian Naira exchange rate to the dollars, simply because I can't tell you, for instance, what is going to happen in the oil market. I can't tell you, for instance, what is going to happen to growth in emerging markets or even in the advanced market. I don't know how the US election is going to turn out. All these things have impact, and it's really a fool's errand to try to figure them all out. It's better to work with what the policy is, which is expect some adjustment, but also know that price stability is a goal, and ride on that. For me, exchange rate is a mechanism for adjusting our behavior. And therefore, as it is adjusted, we will adjust our behavior. For instance, people would have adjusted their consumption pattern to consume more of locally made goods and less of imported goods, which you will agree with me is the right thing to do at this time, as that will encourage domestic production. So for me, irrespective of what happens with the exchange rate, I think we're well equipped to deal with it.
Okay, so just as we're about to wrap up, just leave us with one big change that, what thing that banks should do in terms of innovation or in terms of improvement as regards banking systems or just banking post-COVID or even during the COVID era?
I think as banks, we need to understand that we are incredibly lucky to have access to the kind of human and material resources that we do. And that when we deploy that into building stuff, we should extend that to our customers. So it's not just about digitizing your bank and your processes anymore. I think we need to understand that we should take all of these resources that we have, the platform that we've built, the technology that we have, and make them available to enable our customers become more productive. So at this point, it is what we do with and for our customers that would define us. And we've been at the forefront of that with platforms like the Fair Pay platform that has gone into transport, or the Inkabi platform, which is going into agriculture to help with the agricultural value chain. And this is really how. And also to understand that you need to solve big problems like power. While we may not be able to solve the grid power, we are actively funding renewable energy. So we have Alt Power, which is designed to help customers, whether you're an SME trying to reduce your cost of power or find reliable power sources, or you are a big business trying to make a heavy investment in renewable power. That is really what banks need to do now. Take all of these things that we have done very well and take it to the customers, take it into their businesses and take it into their homes.
Thank you so much, Abubakar Suleiman, CEO of Sterling Bank, for joining in. It was great to converse with you. So yeah, thank you for joining us again.
Thank you for having me, and wishing you the best of the weekend.
Wishing you the same as well. Thank you, viewers, for joining in. It was great to have Abubakar Suleiman join us today on this edition of the Cable Live series. Join us again the same time next week.